So let's bring in Skylar Olsen, chief economist at Zillow. We'll bring her into the conversation right now. Skylar, Diana's kind of set us up for the overall picture right now. There is a divide. I understand why new home sales are soaring, because I, as an existing home owner, am not willing to sell my house because I have nothing to move into, and I'd have to do so at a higher interest rate. Is that
Absolutely.
as simple as it is?
That's a huge part of the picture. Don't underestimate just how much mortgage rates increased and how recently, right? According to research that we got out of Zillow Home Loans, we found that almost half of buyers are buying down points. Now, that's up from 30% as recently as last year. There's a big motivation to bring down that mortgage payment to better access affordability. Builders, by having in-house lenders or just by having that closer relationship, can often provide a partnership in buying down points, providing that buyer that opportunity, if not just providing inventory in the first place that buyer really cannot find, or at least is much harder to find in the existing housing market that is currently experiencing more competitive pressure than it had certainly just 3 months ago.
Skylar, I mean, I had a real estate finance professor back in college, and he used to say, real estate is the most fixed of fixed assets, right? There's only so much of it out there, and that's the reason why, right? And so if that's the case, why isn't there so much more movement? If it is one of those situations where we can see a little bit more value over the longer term, why is the story not compelling enough? Interest rates are still, by the way, by comparison. I hear all the stories of what my parents paid in the 1970s for a mortgage.
Sure.
It's certainly not anywhere near that. Yeah,
sure. Historically, it's still not wildly. Yeah, it's nowhere near in the double digits. Currently, you're looking at 6.7% for prime borrowers in the mortgage market space. But it's important to remember that it was so recently near 3. Zillow research has seen that around, you're really looking at a bulk, around 3/4 of people that actually have mortgage rates under 4%. Now, if you think about what that means for your mortgage payment, to jump from around 3 all the way up to 6.7% for the typical U.S. home value, that's multiple hundreds of dollars, right? That impacts that person who is more likely to maybe move for fundamental moves, that they're locked in. That might be someone looking forward to retiring. They do not want a higher fixed payment on their next move, so they're pretty sensitive to that mortgage rate. What will push them out of their low rate is mortgage rates falling. If that builder can buy it down even further from there, we get closer to where it had been maybe more recently historically. And the other thing is just time. People move for fundamental reasons, like, say, getting married, getting divorced, or losing a partner.
Or getting a new job.
Make sales come back. Absolutely, new jobs.